Mira Business FM, your daily guide to the markets, money, and more.
It's Mira Business FM. It's the morning drive. More news at 10:30 this morning. And just a reminder before we jump into real estate, and we're looking at real estate for dummies this morning, which is right up my street as well. Our new show that's just started here at Mira Business FM, Crossroads. It's a collaboration with Middlesex University, presented by Dr. David Tully and Dima Magalse, who are both from Middlesex. And it's all about the business of media, entertainment, lots more every Friday, 1 to 2 p.m. And then, of course, wherever you find your podcasts as well. So look out for Crossroads. That's all you have to search for. My guest next is a regular guest at the studio. His name is Ajay Menon, and he is here, and it is a pleasure to see you, sir.
Likewise, Tim.
How are you?
Good morning. All good. How are you?
Jolly good, thank you. Not too bad. I'm looking forward to today because I've mentioned a couple of times that what generally happens is you send a few notes in and we talk about something that's either on your mind or you think is topical or is something that maybe a real estate investor's brought to you. Today, here's the headline: Dubai property for dummies, which I think is great. Let's start. I tell you what, you just kick in with the beginning for dummies.
I mean, I always like this, when you go to those bookshops, you find something which is like for dummies, and IT for dummies, accounting for dummies. I think it's pretty much the correct way to clearly explain, to break down everything into pieces, so that any layman could understand.
Do you know? And it's not supposed to be demeaning either. It's just one of those things that always the best way to start, if you're really honest and you know nothing, is a blank piece of paper and to listen and learn, isn't it? And I think there are many of us, some of us in very high positions of authority running countries, that could maybe take a leaf out of that book.
Definitely, because obviously the thing that you are an expert in one field doesn't make you an expert in everything else.
Yeah.
So because you do your business, we do our business.
Yeah. Well, I mean, that's why you're here. You're an expert in this field. So the task today for you, AJ, should you choose to accept it, is to break down the types of property transactions and the reason why. Let's start here. Why do people buy in Dubai?
And this message will self-destruct in 1, 2, 3 seconds.
Yeah, well, absolutely. Strangely, you'll probably spontaneously combust. We'll be like, oh, well, got to find a new guest next week. But why is it? What is it about Dubai? Let's start right there.
See, Dubai is a very young country, a very young city for that matter. Yes. And especially, I'm talking about real estate-wise. Freehold real estate just started somewhere around, just under 20 years ago.
That's right.
And people people talk about real estate quite a lot, and people misunderstand or just assume that it's been there forever. No, it has not been there forever. If you look at the whole world in perspective, this is a very, very nascent market.
Yes.
As far as the Dubai and the UAE is concerned.
It's a good point to make, actually, because I worked for a magazine when Freehold was announced, and it was a financial magazine, and the editor and I went to some of the early kind of reception areas, the show houses, talked to some of the people selling the early real estate, and it was at a time when we kind of said to them, as a financial magazine, naturally, what about mortgage offerings so that people can, borrow, to buy the house? And we were met generally with kind of blank stares. Well, why would you borrow? Everybody's just got the cash, because it was such a new thing. And mortgages as a financial product were a brand new thing.
And funny thing, even now, I think 50 to 60% of all transactions are cash in the UAE.
Well, that's one of the really interesting things about Dubai. That's another part of the story, isn't it? But this is literally just over, what was it, 2002, 3, I think, Freehold was first introduced. So not much over 20 years ago. So we've got a young, growing, and obviously thriving city. And it breaks records every year as well.
Every year. Last year was 217,500 transactions, 917 or 918 billion. What is 1 billion between friends? Anyway, somewhere around that amount of transactions in the whole year. And it actually has a lot of aspects of investment. And is everything an investment, or is just buying a property? Because buying a property and investing in a property, completely different things.
Well, let's make the difference then. Explain, can you define the difference between, okay, buying a property and investing in a property? What's the main difference for you?
Buying a property, you can buy anything. You can just buy anything to live in or whatever you want to do it with. But that does not mean that the value is going to grow in the future. You're not going to make any money out of it. Investing is done in a view that you buy it at a low price, the value grows over a period of time, and then you exit at a profit.
Okay, well, I mean that's a very specific.
That's a very basic difference.
Okay, so that's the basic difference. But do you not think that most people, whether they're investing in a property or buying a property, and I get what you're saying, but not everybody's obviously a savvy investor, but most people see the fact that most of the time property grows. So we're all kind of investing in a property.
Correct. I mean, so I can just actually completely break down into the different types of people investing or buying a property in Dubai.
Okay.
The million dirham question for many people is actually whether should I rent or should I buy?
Yes.
Right?
Yeah.
And there's a simple factor that you need to consider. There is something called a price to rent ratio. If this number falls between 1 to 15, definitely you should buy. If this number falls between 16 to 20, you can consider buying. And if this number is above 20, you're better off renting.
Okay.
What do I mean by that is basically you take the total acquisition cost of the property, you divide it by the annual rent, it will give you a number. It simply means that in 15 years, you can actually pay back the unit instead of paying rent.
Okay, so the total acquisition cost, so what the villa costs you, whatever you pay for it, and where do you get the rent figure from?
If you actually rent that out, and what is happening, I mean, you can get the details from DXP Interact, the DLD.
So you're going by
yeah.
the Smart Index,
Yeah.
or right? Okay. So between 1 and 15, buy.
Buy.
15 to 20, think about
it.
And above 20, rent.
Better off renting.
But aren't you always better to buy, because at least down the road you may get something back? I mean, it's time driven, isn't it?
Correct,
It's time
correct.
of the market, obviously. So I'm not so sure about the last figure.
Okay, the last figure is basically if you look at UAE in particular, because most of the new ones, you should be within that 15 range. And which means your number of years to pay back a unit is typically 15, which is actually very, very less compared to a lot of international cities. If you're talking about cities like Zurich, you're talking about 40 years plus.
For sure. I mean, look, I come from a UK background, and the average mortgage, I guess, would be a 25-year, maybe 30 these days, something like that.
And it's according to your income as well, and whatever you pay back, it's definitely it will take minimum of 25 to 30 plus and 40 plus years in some of the Scandinavian countries, like in the Swiss countries, like cities like Geneva and Zurich.
Sure.
You're talking about 40 years plus.
Okay.
So that is not a great investment per se. Okay, it is going to remain. It's going to remain as a family heirloom or whatever. You can pass it to the next generation. All fine. But if you're looking at the actual returns when you compare to any other asset class, then that would be considered an investment.
Okay, so if you're able to stand outside, be dispassionate, and take an investor's viewpoint, I've got you now. I get that. I mean, this is not a hard and fast rule. This is kind of a rule of thumb, isn't it?
Correct.
Yeah. Okay. So, by definition, in that case, if we take this a little bit further, the most important factor that we all need to think about if we're buying a property is not the same as if we're investing.
That is correct.
In a property.
Yeah.
Right.
And if you look at Dubai as it is, the first set of buyers or the people who are putting money into real estate are the ones who are considering if they should be renting or if they should be buying, and they just buy it just for the sake of avoiding paying rents for a future period of time. And they also have this uncertainty of rising rents. Because of Dubai, of course, the rents are rising year on year, depending on your number of people coming in, supply and demand of the units. So the whole thing factors a lot, and they do not want to live in that uncertainty. So they would want to buy something more affordable unit, so that that is set. Because obviously there are three main expenses in Dubai. One is your rent, the other one is your insurance, your health insurance,
Yeah.
and the third one is your children's education. These three are the most considerable expenses in the UAE.
Yeah, those are the three life expenses, I suppose. So we're breaking this down into property for dummies today, which is I'm quite enjoying, I have to say to you. Let's look at categories of buyers. And I mean, I'm looking at some of the notes, the bullet points that you've sent through. A good number, far more categories than I realized.
Correct.
Yeah.
So we just came with the rent avoiders now. So we finished that that category. The next category is the guy who wants to a pure yield player.
Right.
So what he does is, or he or she does, is basically just find some unit. Doesn't matter what the age of the unit is, in a prime area. Prime in the sense, if there is a lot more rental demand in that area, they would be very happy to buy a very old property. Doesn't matter the age of the property, the quality of the thing. The whole idea is to buy something cheap, if at a discount, get it, put it on rent for X number of years, and be very happy with your the rental yield that they get. He's only putting practically 27%. He takes the money from the bank, leverages the rest, and whatever he gets through that usable years, he's happy with it. But the flip side is that these units do not have the latest amenities. The tenants might move out if a better unit comes into that area. And if he has to exit at a later point of time, he may not be able to exit at a profit, probably even have to sell it at a loss.
Okay, but there's, I mean, potentially there is the upside, but it's obviously it's a risk. But I suppose if a building next door opens up and there's a better swimming pool and a gym and I don't know, jacuzzis on the balcony, whatever it is that is offered, because we have seen that here in Dubai, of course. Then a savvy investor in this category, the rental yield only category, is going to turn around and say, well, I'll knock a little bit off the rent, and you're going to get a tenant.
Yeah, he can. The thing is, okay, this guy operates in a particular fashion. There's nothing is right and nothing is wrong.
Yeah.
I mean, whatever works for him. So the thing is, he's getting a unit. He's putting it for, say, 10, 12, 15 years.
Yeah.
So, and if he's getting a rental yield of, say, 8 to 9, and typically these properties will get a 8 to 9% yield because you're entering at a very low price and there is a demand. And since it's in the prime areas, you might get a better rental amount.
And 8 to 9% yield is
and then
pretty respectable.
You get this for the next 12 years if it's possible. So you have pretty much covered whatever you paid for it. And then when you are selling it, even if you sell it at 50% of what you bought it, you still are making something.
Yeah.
There is a residual value for that property anyways.
Yeah, for sure. Okay, so that's the second category. The third category is what you call the smart investor.
The smart investor. So this guy is a very savvy person. He knows the Dubai market. He knows the UAE market. He understands it's a growing market. And he goes for the full package, the ROI, which is the combination of your high rental yields and capital appreciation over a period of time. These are the guys who buy off plan directly for the developers. So he gets the best launch price for a brand new state-of-the-art unit with latest amenities, future sustainability options. So he's got best of all worlds. So what is the benefit of this is basically when it comes to handover, he can either rent it out at a premium, he can flip it, he can sell it at a capital appreciation because that is when the mortgage buyers come in, when the property gets ready. And even if he wants to live in it, he can live in it. It's a great unit.
Yeah, I guess so. Okay, what would you say a higher ROI, return on investment? What would a rental yield, how much higher a rental yield would a property like this, for an investor like this?
We are talking about anything between 6.5 to 8 a stretch. So 6.5 to 7.5 is what you can typically get for this. Okay. Right? Okay. Unless it's like a waterfront property where the yield goes slightly lower because your entry costs us higher.
Right. Okay.
But there the capital appreciation is a bit more higher and it's much more resilient product.
Right. Okay. So the value increases during construction,
And it keeps going on because obviously, if it's a waterfront property, there's limited. They're not building waterfront properties all the time. So at one stage, it will come to an end. So it is going to be a scarce unit.
yeah, for sure. But it's just a very attractive property, isn't it? If you're buying something off plan, it has the latest amenities, it has access, it has public transport nearby, all of that. Okay.
Correct.
Next category is the buy a great unit to live in.
Yes, and that we're missing the one of the biggest segment.
Sure.
And there's a lot of expats now, big families. They are now coming to Dubai with a view to settle here for a long period.
For sure.
It's a recent phenomenon, actually.
Well, it is actually. We were talking about this earlier this morning, just before you came in here. And increasingly, that's what we're seeing.
Correct. Because if you look at any part of the world, I mean, if you really look at which area is a bit stable, which country has vision, which country is growing, which is who has a vision to be the tech hub of the world, the AI hub of the world, the education hub of the world. That's the Middle East, and Dubai is at the forefront.
Well, it is, but it's also that thing, isn't it, of a stated vision. And a stated vision is one thing. So there's some clarity and there's some purpose there, but there's also you back it up with real results and the experience.
Look at the greenfield, the investments in Dubai, the FDI in Dubai. It's not something, and the vision is not just something on the air. It's actually documented. It's documented. You have a 2033 plan. You have a 2040 plan. You have a centenary plan, 2070, 2071, all the way to 2100. So everything is written down there. Which other country has this?
It's a good point. I'm struggling to think of one. You put me on the spot again in Property for Dummies today. No, it's a very good point. And I guess further evidence of that is, I mean, there's anecdotal evidence that we hear, the millionaires are coming, blah, blah, blah. But also we've seen the increase in population, 4 million Dubai, 4 million Abu Dhabi. I think the UAE is something like 11.5 million now. It's around about that level, I think. But also it's that spread. And I think this is kind of underplayed in lots of ways. And I can't keep up with the spread, but it's the spread of nationalities.
That is true.
Where people are coming from. And it's, if you were to put it in simple terms, it's people piling in from everywhere.
And that is actually a very, very positive factor because you are not typically dependent on one particular country or something happening in one particular region to attract talent from only that particular region. Here, Dubai has become the center, focal point for everybody in the world. So everybody in the world, when they're looking for plan B, it's Dubai.
Okay, so we've got people coming from everywhere, a very positive outlook at the picture that, you and I are painting there as well. These people that are buying this great unit to live, explain who they are, because to me, these are all kinds of different family kind of setups, I suppose, coming over, demographics coming out, some people coming over with family, mothers, fathers. Give me some more details.
Yeah, these are your expats who just moved in, or they have the entrepreneurs or family offices moving in. So these people want a bigger unit, typically 3 to 4 bedroom, could be apartments, could be villas, townhouses, or whatnot. And they also have a couple of different strategies. Some people, they go via the off-plan route. They're willing to wait. They're patient. And then once it gets handed over, they just move in. So even though they're buying that unit for themselves to live, they also have bought it at the best price and have got that capital appreciation should they choose to exit at some point of time.
Okay.
Right. So that is one aspect. Then there's another set of people who actually just wants to buy straight away and then move in, because they are also a part mortgage buyer. So they just have to come up with your 27%, and then the remaining will be leveraged by bank, and then they just move in. And then they stop paying that high taxes for such big units.
Okay.
Or the rental income.
Yes.
And the next category is somebody that's actually a bit of a smart play. What they do is they buy it. So for example, if a product is launched this year and say it is going to be ready in the next 4 years' time. So these people typically come in at the end of somewhere around 2.5 years to 3 years, with just a year to go before handover. Obviously, you need a lot more cash at that moment. So they just buy from somebody at this off-plan resale, it is called. at that stage. So they cannot charge the higher price. It is still appreciated. So, for example, if a typical unit was launched at, say, 5 million, and at the time of handover, you are expecting somewhere around 9 million. This is, at this stage, probably around a 7 million range.
Okay.
So they wait for just 1 year, move in. So, and they're putting the money only for 1 year. So it's basically short-term capital deployment and get maximum out of it. Still, there is appreciation. They only have paid a little bit more premium than the real off-plan.
Okay, I'm with you. I wish, sometimes I really wish I was savvy enough to do this. I was that calculated. I'm just not. So that's another category. The next one the category is the trophy collector, the asset collectors.
Oh yeah, that's the dream of every real estate consultant to find one of those. Now, these are very, very savvy people. They are world citizens. They're not particularly, is sitting in one country. Okay, they've got properties all over the world. Probably their area of operations might be a different country. They would come to this country maybe for a month or 2 months, or they might not even come for a year. So, just once in 2 years. But they want to buy a property so that it creates generational wealth.
Okay.
It's a place to park their money.
And these are the waterfront penthouses. Yeah. These are the big deals.
The mansions, the penthouses that you hear about, the 550 million, I don't know, Bugatti penthouse, and those. These are the ones for these people.
Okay.
They're not sitting and looking at, what is my ROI, what is my, they make money in their business.
Yeah.
For them, this is a place to park their money, or this is a place, I have this property here. It's more like an ego factor. Plus, it is also a generational wealth. When you're buying something of this caliber, that unit is going to be resilient to any sort of downturns, if at all they come.
Yeah.
And because they're not even planning to sell it.
Okay.
And real estate, if you buy at point A and you sell it at point B, is always going to be high. There may be dips in between, but from point A to point B, the price is always higher.
Yeah, for sure. Okay, so that's next level. Next one is these are the distressed deal people.
These are the real smart people. So either they come with the distressed deal, or what they do is they go and buy typically a large unit. You're talking about a villa in a very prime community, established community. This is old. So they buy it at whatever price they can get, whatever is happening, and they completely gut renovate it.
Okay.
Put natural stones, best wooden stuff, put art. They completely renovate the whole place, and then they buy it, say, for example, for 6 or 7 million. They put another 3 or 4 million into the whole the property. 6 to 8 months of work, and then they're selling it at 20 million dirhams. So that's a good.
And you're seeing this happening
A lot.
regularly.
A lot.
Okay.
And the trend used to be Arabian ranches was the first ones, because it typically depends on the age of the property, the desirability of the property. So there's Arabian ranches, there is Jumeirah Golf Estates, there's Jumeirah Islands, the meadows. These are the typical areas that people were doing this, and still continue to do this.
Okay. Final. Is this the final one? I think this is the final one here. Yeah. International investors whose idea is, this is my plan B.
This is my plan B.
Yeah.
So the international, that is actually, we see a lot of international investors now doing this. Either they think that it is a plan B. Plan B is basically what happens if there is a tax change. What happens if there's a lot of geopolitical unrest happening, especially in Europe and North America at the moment. Nobody is very sure about what is going to happen. So these people, okay, where do I go? Where do I park my money? So they're coming to Dubai to invest in a property, and typically they invest in off-plan property because they have time on the side. They only have to pay that the 0% staggered interest-free payment plan from the developer, and once the project is completed, they get to use the leverage because they get the loans from 50 to 60% from the local banks, and the rental yield is higher than the mortgage rates.
Okay.
And there is also one more factor. What they think is basically, especially with the things what is happening now, what happens if there is a market meltdown? If the stock market crashes,
Yeah.
then your money whatever you put in the stock market is nothing. The money is not worth the paper is printed on. So the only thing that is going to create value is going to be real assets, like either precious metals like gold or real estate.
Okay.
And this also serves as an inflationary hedge. There are some countries, like for example, a country like India, you buy a property in Dubai, it is the dirhams are pegged to the dollar.
Yeah.
So it doesn't matter if the value of the rupee depreciates. They have a unit which is pegged to the dollar. So they saved, they hedged.
Okay. We have run out of time, unfortunately. It's always a pleasure to see you. Property for Dummies today. Ajay Menon is the CEO of Luxe Vista Real Estate. More topics like this, I think, and looking forward to next week. Thanks, Ajay.
Likewise,
Appreciate it. This is Mira Business FM. It's the morning drive. The news is next.
Mira Business FM, Dubai's home of business radio.